Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we take a close look at an individual company that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to learn how Stockopedia screens for value. Joining me today is Elio D'Amato, and we're talking AUB Group Limited, ASX code AUB. What's the risk here, Elio?
That's a good one, Phil. And yeah, look, thanks for having me on to talk about a company that, look, I've only just covered recently within the Stockopedia universe, but the truth is I've been covering this company for quite a while and watched its evolution to get to where it is today. I mean, you and I are old enough to remember, old OAMPs and things like insurance brokers and all that sort of thing. And basically that's what effectively AUB do. They take a clip of a pretty big ticket. They make a very complex and dangerous, dare I say it, in regards to insurance and make it relatively simple and easier for their clients, being able to price risk correctly. Hence, being able to receive or charge the same premium that they should be. And, we're even sort of discussing it. We all think of sales and very rarely do we consider the risk, to which AUB don't take on themselves. I mean, they don't receive the premium per se. They are the broker. So they match, the Lloyds of London. Let's go to the big guys, all the way down to mum and dad fish and chip shop in regards to how they go about doing their insurance. And they do that here in Australia and now overseas as well, which is pretty exciting. But of course, this is not the first time anyone's heard about it. I mean, it is a $3.7 billion market cap stock, Phil, and it is in the ASX 200, but it is great to see that it's evolved through this point.
So you've been monitoring this one for a long time. How big was it when you first came across it?
Oh, it was in the millions. It was domestically focused. I mean, as a company, it's been going pretty much since 1950 odd, or maybe even a little earlier than that. But I mean, to be frank, there's been a whole number of roll-ups that have effectively made this business what it is today. And I think roll-ups is a bit of a dirty word when it comes to Australian investors' psyche, as we know a number of higher profile roll-ups, which perhaps didn't do too well, particularly as they went about that last really big acquisition that they eventually came a cropper for them. But I mean, in regards to Australian brokers, it's a highly segmented market. They've been able to do a lot of consolidating there, and there's probably a bit more to go here in Australia. Plus, they have their overseas business, which has done quite well for them too. So, I mean, as far as we're concerned as a company, that they're one of the good guys. They've actually succeeded in regards to their roll-up strategy, and they have been able to ultimately bring it all under that one stable and achieve those synergy benefits. But that doesn't mean that risk is gone altogether. I mean, they also made a recent acquisition. So Tysers, I think, was made back in 2022, and then they came out with Pacific Indemnity. I think they took a JV interest in that at the start of this financial year. So it hasn't gone completely. It hasn't disappeared altogether, but geez, they do really well in regards to integrating acquisitions, and they've grown successfully, and a great Australian story in my view.
So presumably integration and through acquisition shouldn't be that difficult, because insurance is insurance all around the world. I mean, it's basically the same business model, isn't it? There's not going to be that much difference made by cultural differences or ways of doing things, because it is pretty standardized industry, isn't it?
Well deduced, Phil. It is a pretty standardized industry. However, I do need to say that when it comes to dealing with the human beings and personalities and the way that individuals...
that old thing.
Yeah, that old chestnut in regards to working with one another, that can be a bit of a challenge. But not only that, we've had examples in the UK, for example, where there have been changes to regulations, and it can, from a time, pull the rug from underneath the company and ultimately see what was a good business model turn into virtually nothing overnight. And, there's a saying amongst the analyst fraternity that the UK is where good Aussie businesses go to die. And let's face it, there's a litany through history in regards to companies that have done that. So whilst, yes, the actual insurance product, the need for insurance is a universal tool. And I think that's probably where you're coming from, that we're going to need insurance irrespective. And that's where AUB is so attractive, because as not the actual insurance provider, but being a broker and dealer of insurance, if you're going to need insurance and you're going to have a complex business system, then you're going to need their services. And that's really where they've been able to leverage, not only in regards to the delivering of services, but also their IT platform as well that they've delivered and are achieving solid results from at the moment from CFOs far more intelligent than you and I with regards to assessing the risks that those businesses are facing at the moment. And let's not forget, every Russian and his dog is trying to create a cyber attack in the business. So it creates a whole new target market for a stock like AUB. And again, theirs is not to necessarily solve the problem. Theirs is just to match the operator with the insurer and assess the risk. And bingo, you then have a happy marriage, because I can tell you now, once you're in there, it's pretty hard to get out, because they do make your job a hell of a lot easier.
Yeah, but we both know and understand, we were talking off air before about our own insurance requirements and how difficult, not so much difficult, but it's become so particular in terms of what you need to disclose and what kind of risk you need covered. So it's becoming more and more necessary for businesses and individuals to understand what's going on with their insurances.
Yeah, correct, Phil. Exactly right.
So run us through the numbers on Stockopedia.
Well, look, in terms of Stockopedia, this is a company that rates quite highly. Overall, they achieve a stock rank of 81, which puts them in the top 20% of stocks on the exchange. So they're not in the upper echelon, but remember, ours is a system that rates from 0 to 100. And therefore, once you're at 100, then there's only one way you can go, which is backwards. And in this instance, the good news is they still have room to go up. From my perspective, I rank quality quite highly. And we're talking about a company that has a pretty good quality score, rates at around 90. Now, it's important to note that AUB Group can be bundled in with a number of other insurers like AIG or Suncorp or some of the unlisted ones. But I think it's important to remember that they're different. They're not exactly the same. They're not a premium writer. Okay, so they should probably be assessed more like an industrials business rather than necessarily an insurance company, as it were. And when I look at things like value, for example, where it has been challenged, that's not all that hard. You could look at their share price for the last 10 years and you can see it's heading northeast in terms of a general price direction. So that's really where you want the price to go. But when we talk about value, it's a PE of 18.6, which, is not ideal, but it's definitely not lofty. That's further supported by an EV to EBITDA of some 9.73, which, again, below 10 isn't the cheapest, but it's definitely not the most expensive that I've seen that is out there. So even though the value rank of 31 does pose a bit of a restrictive question, some of that's to do with a 2.83% forecast dividend yield, which, to be honest, if we look at their dividend from where it was, and the company has said that total shareholder returns are definitely something that it is focused on. If we look at it back from 10 years ago to where it is today, then obviously that dividend yield would be far higher. We're talking about just getting into this business today, which, for all intents and purposes, notwithstanding the high that was in August, is pretty close to all-time highs anyway, as we speak. So the fact of the matter is that, in terms of value, that's probably where it's challenged at the most. But then again, you expect that of a high quality business. But then you look at momentum and it is soaring at 94. And of course, that's further supported by, the strong price performance relative to its broader index, relative to its moving averages. Analysts have liked it over the last year. And although not being too cynical and wanting to sound like they're upgrading their EPS forecast to keep up with price, I suspect there's probably a little bit of that here in regards to AUB. That's the good thing. And with a beta of 1.2, it also has sufficient volatility in its price that if you pick a good business, then it's definitely going to do well for you. And in our view, if the market goes up 1%, this should go up 1.2%. as it were. All things being equal, of course, in a very systematic and clean market, which, of course, we know it never is. So I'm not going to bore you to snores in regards to that technicality. So it's a good, healthy business. It's going in the right direction. Value has come down on the back of the fact that it has been doing so good. But I mean, at the very least, the analyst re-rates and the like have been pretty solid. And its commitment to total shareholder return also provides an added way to support to that. Further, recent acquisitions that they've been making has also further supported this business's growth trajectory in our view. So overall, it comes up as a stock rank of 81. It's definitely not a basket case. It's not in the upper echelon, but I tell you what, there's far worse places to park your money. And to be honest, AUB is a quality business and has been over the long run.
Are you picking shares on gut instinct? Buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. You mentioned beta. Can you just remind listeners what that means for a particular company?
Yeah, sure, certainly. So beta is a concept of outperformance or underperformance. And the easiest way for me to explain this is that if the beta is 1, then that means that if the market goes up 1%, that the stock will go up 1%. The market goes down 1%, then it will do the same and go down 1%. So that is a beta of 1. And rarely do you find stocks that trade on a beta of 1. Usually they're either above 1 or below 1. In most instances, they are above 1, which means that if the market moves 1%, in the case like with AUB at 1.2, I think 61 actually is technically where it sits, then that would mean that the stock would go up 1.261% in response. If you get a beta of less than 1, then that means it is less volatile than the market. So something like cash, for example, you would expect that to be below 1, whereas the market might swing, go up and down, do all that, but cash is very steady and doesn't swing as much. So you would expect that to be at a much less. And if you see a stock on a beta of, say, 0.8%, chances are it's more of an income dividend type of stock or vehicle, I should say, and probably less prone to, it's listed on the market, but really isn't an equity as such. And I think that's important to remember. So it's a concept that I suppose quant boffins like to look at, particularly when we're coming to assess a business, because sometimes when we look at a stock, it seems too good to be true, which probably means it is. And it's always good to get a good understanding in regards to its beta, to understand how traditionally volatile the stock is relative to the market, to get some sort of understanding as to what we can sort of expect from an underlying stock return over the long run. And in the case of AUB, they've proven that operationally they've done quite well, and as you would expect, therefore have done better than the market.
So am I right to think that it's going to be a low-cost operation and that there's not a lot of plant and equipment involved with this kind of business?
Yeah, correct. That is true. I mean, capital expenditure is obviously one of the things that the company saves a hell of a lot on, because they don't necessarily need to create new insurance products. There's new risks that are formulating every day, but they don't have to solve it. They basically just got to match the two parties. And if they do that effectively, then they will come out trumps. And yes, I'm sure there's a little bit of spending that would have to go ahead in regards to their online business, and that being, or their support services division, as they like to call it. So BizCover, I think, is the client-facing name, as it were, and it links up advisors on the AUB network, plus others that are carrying a significant risk as well, who also have access to it. And obviously that does play a role, and, continuous investment into that. But again, it's negligible relative to where this company has to go. The recent acquisitions, though, in regards to its targeting overseas, are probably going to need to see it drain some capital in the near term. Let's face it, I mean, this stock makes no apology in regards to its roll-up strategy and how successful it has been in regards to it. I mean, we're talking about a stock that has effectively grown its shares on issue by some 9% over a 5-year CAGR. So they're not afraid to raise capital on market in order to fund an acquisition that it feels makes sense. So that is obviously a need in regards to capital expansion. So whilst the existing organic operations might not need much to keep them going, they still definitely are capital hungry when it comes to growing overseas and expanding as aggressively as they have been. And hence why I think there will be a value driver for them moving forward. So they're a bit of a dichotomy, as it were, where yes and yeah, nah, as we say in the Aussie vernacular.
So, turning to the outlook and the risks going forward, is the only possibility of growth with this company is more acquisitions? And does any danger lie in those waters?
Look, it's really interesting because in their latest AGM presentation, they did break down where they expect their net profit after tax expectations into financial year 2025. And there was a pretty big chunk that was through, well, there was a chunk through organic growth where they were saying that would probably be sitting at around the 7 to 10% mark versus acquisitive growth, which was an extra on top of 8.7 to 9.8% contribution to the overall bottom line or bottom guidance that was being provided. So acquisitions are still important in regards to this company. I think the long-term growth trajectory, a lot of that is going to come from its offshore operations. I did mention just very briefly the Pacific Indemnity deal that they did just at the start of this financial year. This also includes, or prior to that was Tysers, which was back in 2022. And that does give them exposure to the UK and a growing global market. It's basically created a new international division, which the company now does disclose on its accounts as well. And obviously the need for insurance is, quite strong, irrespective of where you are. And therefore one would assume that growing that broker network globally is going to prove a pretty strong boon or strong long-term growth boon for them moving forward. And notwithstanding that they're pretty dominant here in Australia and New Zealand, which has traditionally been their target market. And their software side is also relatively dominant for those that are wanting that. But I suspect a lot of the growth will come from the international parts of the business, which it does lead us to the risk. And obviously, that's probably the biggest risk with this business at the moment. It's not necessarily their spending, but it's what they've spent on. And if something does change in the UK, then obviously that may very well impact AUB moving forward and their business and how that runs seamlessly. Also, they are highly reliant on their technology and what they've got there. And if there's any cyber attack in regards to that, then that could also prove a risk, plus that integration risk that we were sort of joking about. And it's a real risk because there's plenty of businesses globally that have had troubles, merging cultures as a lot were into the one company and bringing it all under the one stable. Well, there's that always underlying risk as well, which unfortunately we don't ever hear about until it's inevitably too late. Yeah, but the good news is from, I suppose, the early indications is that things have been going well with regards to them. And let's face it, insurance brokerage, that market is very competitive. I mean, there's good money to be had there, Phil, if you ever decide to branch into that space. But the problem is it's incredibly competitive. It's cutthroat. And that's where scale does provide a bit of support in regards to that, which is where that $3.7 billion market cap does support this business as well. So notwithstanding, you don't just open up a shop in the middle of the UK and expect all these billions of dollars to come in. There's a lot of work that's got to be done in regards to that. It's pretty cutthroat. And therefore, they're going to have to differentiate themselves from the other providers or the other incumbents, as it were, that are out there in regards to it. So it's not without its risks. I hate to, but then again, all operating business in a market, free market, always carries an element of risk, irrespective of where you are. So it's always important to keep them in mind and remember them. But in our view, we think that growth opportunity combined with the pretty solid stock rank score overall puts them in a pretty good position to continue to expand from here.
And I think it's worth reflecting the role of insurance in Warren Buffett's wealth management strategy. And I also think about Markel, which is often known as a mini Berkshire in the United States, where the cash flow that's provided by the insurance business then gets redeployed in buying good companies to build up a very solid portfolio.
Exactly. And that's where these guys are trying to do well. Although, look, I've heard buckets of Buffett quotes over the journey, as I'm sure you can imagine, Phil, and whether he invests in insurers, doesn't invest in insurers, etc. But then he bankrolls AIG, now he doesn't. And there's a whole range of different things that I don't want to get too bogged down in. But obviously, these are cash-rich businesses when times are good. And servicing them and mixing it, and because of that need for insurance, I mean, there's very little large company out there that's just going to basically wing it, particularly in this world of increased threats, as it were, that's going to wing it on their own and self-insure. They're most likely going to need an insurance partner, and marrying the two is obviously that special niche that AUB have been able to capitalise on, and we think still offers them growth perspective or growth opportunities moving forward.
Elio D'Amato, thank you very much for your thoughts.
Thank you, Phil.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.